Hello, this is Dari here. Hope you're well. Today I want to show you how to understand market structure. And to understand market structure, I want to use ZigZag indicators to do that. Okay, first of all, what is market structure? It's a way of knowing when the market is in an uptrend or when the market is in a downtrend. When market is in an uptrend, it will make a higher high. On its retracement, it will make a higher low. So when it is in bullish mood, it makes a higher high. When it retraces, it makes a higher low. What do I mean? Okay, look at this chart here. So we can consider us to be bullish right here, right? So first of all, you see market make a higher high here, and then it makes it a higher low. Although it retraces, but that is a higher low, higher than this previous low. Then from here, it makes a new higher high and come back here to make a new higher low. See, this low here is still higher than this low here. Then it moves on again to make another higher high, which is higher than here, and went on to make, well, you can see here, you can say it's a higher low, but almost instantly near the same level. So at this point, an alarm is being raised. You will be alarmed that, look, it doesn't make the new higher high a higher low. It seems this low is equal to the previous one. Then you'll be thinking, is the trend over or not? But it is confirmed in the next move. You can see the next move, we are no longer making a higher high. We are no longer making a higher high. You can see the previous high is here and the new high is here. So it shows you that the trend is waning, the trend is reducing, is going down. So let me use that indicator quickly to show you how you can take advantage of that. So let's go to the indicators. It's an indicator that is available to everybody. So I'm going to view here. Let's put ZigZag indicator there. It's called ZigZag. We're gonna make sure the line width is a bit, let's choose a thicker line. Inputs, this is the default value, but I want to make it very succinct so that you can see exactly how this market structure is being built. I'm going to use value 3, 2 and 1. Okay, value 3, 2 and 1. Off we go. Okay, so let me take that off now so you can see. Right, so this is where we were before. So I told you earlier, here we make a higher high, we make a lower high, higher high, lower high. You can see here it's no longer a lower, it's almost instantly the same. Okay, now we don't make it a new higher high again. Hence, you know that is going down. That trend is changing, and you can see in a downtrend is opposite the case. You make a lower low, and then when you retrace it back, you make a lower high. So this high is lower than the previous one, but this low is lower than the previous one. Then you make the new lower low. You can see this new lower low is lower than here, and then you make the next lower high. So this high is lower than that. Then you are still in downtrend here, lower low. But look at here, when it retraces, it's no longer a lower high, it is now a higher high. It shows you the trend has changed. It's changed from being downtrend here, we are moving into uptrend. So that is a higher high, then higher low, higher high, higher low, higher high. That's we're in uptrend here. By the time you see this retracement, is no longer an uptrend at this point, because what we have taken out the previous low. So here you are thinking, are we downtrend or not? But that will depend on what you get next. So next, the next move is what? Is a lower high. So here you are not so convinced what we are now. Here we are in a kind of a range, but look at here now, the next move here is a lower high, which means if we are kind of moving towards uptrend, because we cannot break the previous low anymore. And now this has been confirmed now that we are in an uptrend, because you see now we are having a lower high. So how do you take this advantage of this opportunity to trade it? You are going to be looking now for a buy, because now it confirmed that we're in a bullish momentum. So we have broken our previous high. So you'll be waiting for this for the correction on this. So when you get a correction, on this, you are going to go long. Okay, so this indicator is going to help you to understand market structure. I'm using 1 minute chart so that I can explain it. You can see live how it works. So you can see that if I take off the indicator, you can still do the market structure, but sometimes it is very subjective. Some people will think that the high is this one, they will not go for this this correction move. Some people will go for this correction move, but when you use this kind of indicator, then the correction is shown to you. Also, I'm using a very tiny value of the indicator. For example, if I go to the indicator, I go to the input values and I use the default value. So the default value is this. We'll see the difference. Okay, the difference is that you will not see all this correction move. You can see the whole move from here is just one single move. All right, one single move. And because this indicator changes a lot, so right now it doesn't mean that this is where it's going to make its last uptrend move. If the market start to go up again, this indicator will extend further and further and further. So the more you squeeze it smaller, use a smaller value, the more accurate it might be. That is, it will not change after it has already printed itself. So I'm using probably the lowest values that is available. Okay, so now you can see we are looking at a correction right now. We are looking at the correction. We have said that we are in an uptrend, so now we are looking for a correction. So there are two ways you can trade this. One, you can buy at the correction, or you can buy at the breakout. I prefer to buy at the breakout. So I'm going to put a breakout area here. I'll put let me change that so that we can see the line properly. Let's change the color to what? Let's change it to dark olive green. Okay, so I'm waiting for the breakout here. So as I said, some people will take the trade while they see the correction move because they know that now we are in an uptrend, but I would prefer to wait for the breakout to happen. So when this price actually show me that it has broken back uptrend move, then I will buy. So I could put either a buy stop. So let's say I will trade, let's say buy stop, something like this. Let's trade one lot. Buy stop, put it at 114. You can adjust it anytime you want. 114.48, 114.48. Okay, so let's say buy stop, let's put it there. So but you can adjust it. So I can adjust my buy stop to the same level here. Okay, modify my buy stop. Let me take the previous line off so that it won't confuse you with a buy stop. Okay, so that is where we are now. So you can see from here, if we do not take out this previous high, you see we are having this up move now. But if this up move does not take out the previous high, that means we are no longer in an uptrend, right? We are no longer in an uptrend. So because of that, I want to see what's going to happen. I want to adjust my buy stop a little bit away from, because I want to see the price action on that level first. See if it's going to clear that previous high. If it doesn't clear that previous high, that means the uptrend might be off and we will be looking for downtrend. Instead of buying now, I will be switching to selling. But I need to check what the market is doing, what this market is telling me. So I'm not deciding anything. I'm just waiting for the market to tell me what it wants to do. So right now you can see we are previously going high, and we have a higher high and higher low, but this next move needs to be higher than the previous high to continue the up move. But if it's not, then the uptrend, at least on this time frame 1 minute, is off. As you can see, that is off. So what we are going to do, we're going to delete this order, because this order is no longer valid, because you can see we are no longer taking out the higher high. In fact, if you look at it, we are now going downtrend because we have taken out the previous low, right? We've taken out the previous low. So let's see how this develop. I just want to keep it so that you can actually see this in action. So we have taken out the previous low, and if we have a bit of pullback now, pullback or a bit of retracement for this down move, and if that doesn't go past the previous high, then we are still in a downtrend. Okay, so let's wait, let's watch that and see. All right, so I make it bigger so you can see. Okay, so we have taken out the previous low, right? So that means the uptrend, at least for now, is temporarily halted. So let's see what happens next. Are we going to, if you take out this low, if you keep on going lower here, the downtrend might be in play. So at the moment, we are not sure what is happening. We are not sure what the trend is. So this is, we can classify this place we are now as we are in a range. We are completely in a range here. We wait for the next move of the market. So we wait for the next move of the market. We have always been in a trend right from here, uptrend. This is higher. Okay, let's do this. So this is higher high, lower high, higher high, lower high, higher high. But here is no longer lower high. That means we are out of the uptrend. Okay, let's see what's happening. So here you can see we are broken out the previous low, so we are no longer in uptrend right now. We are in a range, so we are waiting for what this market will do. So if we make the next move and go past this previous high, then the uptrend might also be in a play again, but we have to wait. So it might take out this previous high, but it need to show us, the market structure need to show us that it's in a proper uptrend. For you to be in a proper uptrend, you must see higher highs and higher low at least once before you conclude that you are in an uptrend. Okay, so the first move we are looking at now is going to be our higher high. So when we make the higher high, we have to wait to see the higher low, the retracement for the higher low. Then we know we are in an uptrend. So otherwise, we are still in a range. Okay, so as you can see, we are nearly breaking the previous high. Okay, so let's see if we break this previous high, then we call it higher high. Then we'll be waiting for the retracement. I hope you guys are getting this. It's very, very simple. This indicator is ZigZag indicator. I'll show you the settings for this indicator. I'm gonna go to indicators, ZigZag. I'm using 321 settings. Okay, there's nothing else. 321 settings. Originally the settings is different to this one, but I make it is the smallest settings. Okay, all right, so we are making a new higher high, not finished yet, but let's see in the next few minutes, maybe we are going to break it. If we don't, we are going to watch. That's why as a trader, you let the market speak to you. You read the market, you read it. What is it saying? Where is it moving? Where is it going? So now we were thinking earlier that it's going to break the highs, but you can see this new candle is not saying that yet. So it's a matter of wait for the right moment. You wait for the right moment, and once the right moment arrive, you are ready to go. Okay, so and you can use this we are looking at USD/JPY here. Let's say you pick any other time frame or any other pair. You can read this. This is higher high, higher low, higher high, higher low, higher high, higher low. So here we are still in an uptrend. Okay, so as I said to you, personally, if I'm going to trade this one, I am going to set a buy order above here because we're still in an uptrend. So I'm going to say trading buy stop. Let's place it buy stop at 2223. Okay, what is it? Okay, so we put a buy stop there, but let me adjust it a little bit closer to the price. Okay, so we adjust it. That's a buy stop because you can see we are still in an uptrend here. We move to the first high. When we retrace, it's a lower high. Okay, sorry, it's a higher low. It's a lower, it's lower, but it's higher than the other one. Then we move to the next higher high. Then we have the higher low, higher high, higher low. So the next move here should be higher high. So higher high is what we're expecting. We're expecting this to be higher than the previous one and take out and activate my order. But if it doesn't and it goes back lower than here, that means this trade is off. What we got in the other previous example, we're nearly getting the same thing here. So we shall see. We shall see. As you can see, this is actually, you can see the uptrend is off because we have made a new uptrend line, but it is not higher than previous. So the uptrend on this occasion is off. So my trade is gone. I'm deleting it off. Okay, I'm deleting that off as well because we have not made a new high. So let's look at what the USD JPY we're looking at before, what it's doing now. Let's see. Okay, so now we're back to the USD JPY. Okay, so what can you see? What can you read from here? So we say over here we are in a range. So now it's trying to make a new higher high, and when it does, we have to wait for the correction first to see. When you will make the new higher high, you need to wait for the new higher low to form, and that will tell you you are in an uptrend. Okay, let's see something else. Let's see Euro Australia. Okay, so this is an example of a downtrend. Okay, let's see from here. So we start from here. You see, you make a new lower low, so it's lower than this previous low, lower low. But when you move, when you have this correction, this is a lower high. It is high, but it's lower than the previous high. That's lower high. Then the next move is a lower low, and then you see lower high. For me, if I'm looking at this particular trade, I will have gone short at that point. You understand? I will have gone short at this point, at the breakout of here. So right now I will be in profit. Okay, let's see Aussie dollar. Okay, so these guys, they are still debating whether they will move up or not. Let's see USD JPY. Okay, so now you can see, okay, so we are breaking the new higher high, but it's not yet confirmed until we have the correction. So once we have the correction and it is lower than this previous correction, then you confirm that yes, we are in an uptrend. Okay, so you can use any currency pair for this. It's so easy to apply and it's doing it automatically for you. What can you read here? Tell me what you can read on this chart. You read it yourself and tell me what you can see. What about here? What can you see? Are we uptrend or downtrend? Okay, it's so easy to see. What about this? Are we uptrend or downtrend on this one? You can see higher high, higher low, higher high, higher low, higher high, higher low. We are still in the uptrend because this low here is actually higher than the previous low. So we are still in an uptrend. So if we buy now, you can still be sure that you might still be on the right side because you are on an uptrend. But I prefer, if I'm going to do this, I will prefer to have the breakout of here to tell me that we are still moving forward. I hope this you got this. This is a way to understand market structure, so you can apply this to any time frame. I'm just using 1 hour. It can be applied to 5 minutes. It can be applied to 15 minutes. As you can see, it can be applied to 30 minutes. It can be applied to 1 hour, 4 hours, daily, weekly, and even monthly. So from here you can start to analyze yourself from monthly point of view. What are we? Tell me, are we uptrend or downtrend? You can see right now, because you are making a lower low, so you are no longer uptrend on this trade. The uptrend is off on a monthly basis. Look at the weekly, definitely downtrend. Look at daily, what can you see? Downtrend, and so on and so forth. So thank you so much for watching. I hope this is beneficial, and I will bring you more interesting topic later on. Do subscribe to the channel and make sure you click the like button to show your appreciation of what we do, and click the bell so that when I upload a new video